Hello everyone, and welcome back to Elysium Trading Empire channel. So it's been a while since I didn't record a trading video. I've been recording some self-development mindset video, which I recommend you to watch because they are very important. I think self-development and being awareness and all this mindset stuff has been more important to me and to my trading journey more than any other training or course that I did about trading or whatever. I think most importantly, your success relies mostly on your mindset and not on your trading skill. So I will do a short video today because what I'm going to explain is very simple. It's a method that I tried since September, and first I back tested it and then tested it live, and of course now I have no problem with entering late, if we can say late, on a trade because I have confidence in this method. So this method, what is important is it works only with an impulsive move. What is an impulsive move? It's a move that is going straight, you know. You will see in the example right after. So just to make things clear, that's why I underlined impulsive everywhere. So let's start. So first, you need a straight move. And a straight move, of course, has many imbalances in the 1 minute. So this method, I use it in the 1 minute. I didn't try to test it in any other time frame because personally, if you know my method of trading, I go in and out very quickly. I'm not a scalper, but let's say 20 pips is my aim, considering my strategy, of course. So 20 pips, usually it's 1%, but yeah, whatever. The 1 minute fits well for this method. So I've been back testing and live testing for 3 months now. So yeah, most of the time it works pretty well. It's very simple. That can also be used to pyramid positions. So even if you quote the first entry, you can confidently take a second and a third position to maximize your profits. Of course, the second and third positions must be lower size than your first one, based on the risk on the risky potential. So based on my testing, I think that you can enter safely up to 3 times. So if I have missed 3 entries, I'm letting the trade go, and I'm not trying to re-enter from any area. It doesn't matter. For me, you have three shots. So let's say you miss the first one, you still have 2 shots left to go for your trade. Usually, and this is not like a science-based rule. It's more like a general rule that I apply myself, because of course, the more you have a rule-based strategy, the easier it becomes to stay disciplined. So beware that the more you miss entries, the riskier it becomes and the lesser pips of profits are left before it can return to your entry. So of course, if you are aiming, let's say, for 30 pips move, let's say your liquidity area target is at 30 pips. Your first entry is 5 pips stop loss, and then your second entry is like 10 pips later. So you have missed already 15 pips of the move. So you only have 15 pips left. You can still take 15 pips, but beware that you have less, so the less profits, and also it becomes risky because it can come back to your break even faster or quicker. Let's say if you are aiming for a swing trade, because maybe it's a unidirectional day, you know, it can go down, 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 down forever until the end of the day, I mean. If you got the first entry, you can keep it, maybe second one also, but the third one, it may come back during the day to either the third or the second entry. Even sometimes it can come back to the first entry and take you back at break even. That's why I'm not a fan of swing trading or even keeping a position for a long time. When it runs into liquidity, just take bank some profits, and if you want to let half a position, does not matter. But never regret to take to bank some profits. It's very important for your mindset, for your account balance, for everything, for your next trade also, because psychologically you will be in better position when you have banked some profit rather than if you took break even or a loss. So let's see what is this strategy about. So I always start, of course, I don't trade straight from the 1 minute, even though this technique is a 1 minute method, but you always have the analysis, all time frame analysis behind. So the day starts right there inside this area. So this week is not here yet, and I'm aiming for at least this imbalance. So my target was this buy side liquidity, and so I know that I want to buy. Okay, so remember, the most important thing is the direction. If you have the right direction, then everything becomes easier. Everything. So I first start with my target, then I zoom in, I see if my area is okay for buying. So you see, we start with this small candle, H1, and you have an accumulation of sales. You see unmitigated order block for sell. People will try to sell because we just have broken the structure right there. So most here also you have a very important liquidity equal, relative equal highs. So everything is aligned. Most people are selling. You have this 1 hour fair value gap which has been formed between 8 and 9, between 8 and 9, and at 9 using Paris time, of course. So at London open, if you want, it comes and retest with a small wick this fair value gap before launching the rocket into buy-side liquidity. So now we zoom in straight into the 1 minute. I think I've already talked about the power of free concept from ICT during this summer in previous videos. And I wanted to make a video about this, but finally, I don't think it needs a video anyway, because it is an ICT concept. So I'm not here to teach you every ICT concept I use or don't use also. But of course, it's interesting in some example to see how powerful it is. So they start. This is, I never trade before 8 or very rarely. So usually I start trading at 8 or looking for trades. You see, first we accumulate buys, unmitigated OB, unmitigated OB, breakout structure. People will try to buy there and there. And I wanted to sell from there, but it's not the subject of the day. But if we had fair value gap right there, I would have taken the sell to aim for this liquidity. But my bias, remember, was buy mainly. So I'm trying to get as much not involved in any trades, because then once you get involved in trades, especially counter trend, countering your ideal plan, your initial plan, you can you can miss, you can start getting caught in, you know, emotional bad emotional states. So I prefer to wait for my first shot to be with my initial plan direction. So first, accumulation of buys, then we manipulate the buyer stops, and then the move happens. So here we have a shift in market structure, because so here you have a shift lower, and then boom, straight we shift back into a buyer bullish order flow. So I wanted to take the trade from there. Why from there? Because you see, this is a order flow. So you have this push down, push up into this order block, and boom. And then we didn't retest this order block. We just ran through it. So when this happens, usually it comes back to retest this order block as a discount area. So I had my order set right there, and stop loss 10 pips right there. Safely, it would have been below this low, because I think this low is protected now. And honestly, it wouldn't come there. 90%, 99%, it would not come there, because this is the only order block available to people to trade from after this BOS. So I don't think it would give opportunity to people, you know, for buying there. It would be too easy. But other than that, this should be a discount area. Well, it didn't come there. So I missed the first entry, which is this one. You take the first imbalance of the whole move and you buy. But the thing is, I saw it, but I didn't take it because the stop loss is too wide. It's too wide for me, for my strategy. For me, it's like almost around 10 stop loss maximum. And I was waiting for this area. Now, the thing is, after it hits this fair value gap, boom, it breaks with displacement and new fair value gap. Then, when this happens, it gives you a second entry. So you enter right from the top of the fair value gap, stop loss below. So the stop loss now is smaller, which gives you a better risk to reward ratio. So you enter from there, stop loss below, boom. Okay. So this is the second entry. Now let's say you miss this second entry because maybe you expected, let's say this is short-term low, you expected maybe an intermediate term low, like I did. I did expect something like this, and then trading from the short term. But, well, you miss the second entry. What happened next? So the second entry was there, okay? Then boom, big fair value gap, big move. Same thing, you take the last imbalance, you trade from it. Now, a question arises is where do you put your stop loss? You have many options. The first very aggressive and risky option is you put your stop loss just below this big candle because you think that this fair value gap is enough. And you see it's trying to build many order blocks. So many unmitigated order blocks, 1, 2, 3, 4, etc. So you can put maybe the stop loss there, but then if it comes there, what are you doing, you know? And the safer option is to put your stop just below, let's say this one, or at least below this one if you think that it will not get into this order block. Personally, I would put my stop loss right there. But from experience, I know that when it goes straightly like this, generally it doesn't need to go further than the first big fair value gap. So this is the third entry. Now it becomes riskier. The thing, what is good also in this method is that you can go break even very fast. So once you break from this, you know, you can from there, once you start forming again some imbalance, break even, you know. Same here. You retest, boom, you start forming some imbalance, break even. You trade here, imbalance, break even. But of course, the more far you go, and let's say the less powerful and the more pullback it will come, it will go, you know. So let's say you have this fair value gap. This is the fifth one. Now you see it comes back to mitigate the order block. And potentially it will come back and take some liquidity like here. But this move, which was very clean, offered 7 entries without being stopped. Then on the 8th entry, you get stopped out because you put your stop, let's say here, boom, stopped out. But then you can enter again. You just have to wait for some liquidity formation. You see, here you have some range. We take the liquidity below. shift in market structure with imbalance, boom, you can start to trade again. So this becomes intermediate term low, short-term low, and you trade from this short-term low, boom. Again, second entry, third entry, and boom, we hit the buy side liquidity. The thing is, at the start, you don't know that. I mean, if your analysis is on point, you know the potential. But if you don't have your target area, of course, you will be afraid because you will think, oh, maybe it's a trap or it will pull back until there and etc. You know. But that's why I put a lot of, I emphasize a lot the fact that the first thing you have to aim for is the target. Once you find the target, everything becomes easier and you get more confident. Who would trade there? No one. No one would enter right there. No one would even enter from there. Some people maybe would enter there. But no one would enter from there, nor there, nor there. So this was one example. So personally, I didn't enter this trade. Once I missed this move, I just stopped watching, and because on a Monday, I didn't expect such move, to be honest. So, however, the second example, I did enter live. This was yesterday. So I expected a manipulation and taking all this liquidity because you see it has been accumulating, etc. So even though my bias was still buy on the long run, for me, it was not good to buy from there. So I was expecting some downside before any bullish move can happen. And I was targeting perfectly this area. So now, just for the sake of learning, again, the power of 3, you see this accumulation of buys, the manipulation, and of course, the distribution. Now, you are not forced to, trade the third move, the distribution move. You can also trade the manipulation move, which is often very quick and it offers not a lot of opportunities. But if you want quick picks fast, then you can aim for the manipulation move. So here we go. You see this range, break of structure, all this liquidity. So when I saw all those fair value gaps, I knew it would not come back right there, probably. So there was 2 scenarios possible. If we didn't break this low, I was expecting maybe a pullback right there. Or also, it could just continue and form an order flow. So here I didn't take the entry because I wanted to see if it wanted to go above or if it is forming an order flow. Since we took this low, I was not confident to trade straightly from there because it could either do like intermediate term high, and this could be a short-term high, and this could have made intermediate term high, etc., you know. But so I let the trade develop to see what the market wants to do. So I was waiting to see if this fair value gap retest would produce another move down with fair value gap also, with imbalance, which it did. I was expecting to trade from this little gap, but it didn't come, and it formed a new, clearer fair value gap, better looking. So I traded straight from this, stop loss above this high. Since the order flow is formed, you know, and I knew after this it would go very fast. So I took the entry, and then boom, I closed my percent, because we never know if it comes back, maybe around break even or something like this. However, I could have taken a third entry, because if you remember, 3 shots at least, most of the case, first, second, and third shot, and you aim for the liquidity area. So from there to there, I believe it was a little bit more than 20 pips, but the full range, it was like 40 pips. So I took at half of the way of the final target area. But you see, even the third entry have produced a significant move. So you could take more than 20 pips from there to there, which is another percent. Even if you miss this entry and this entry. I recommend you to backtest this method, and you will see, I made a mistake right there, sorry. It is 1 minute, it's not 15-minute chart. You can see that every day, or almost, because when you have days where the market is going sideways, you know, no real direction, and it's producing a lot of noise and a lot of wicks, etc., like this, it's not applicable. But when it's going with a lot of imbalances, going straight, not really, you know, the only real order flow, it was this one, you know, but otherwise going just straightly. And most people will wait for a pullback until there, you know, before trying to trade. And after they have missed this significant move, of course, I expected a shift in market structure. Now people try to sell from there and there and there and there. You know. It's too late for them, and you already have banked some profit, and people now are trying to enter the market in the wrong direction. And every day it happens like this, every day. So this is it for the video, just for transparency matters on the move that I took, you know, from 0.4384 to the bottom of this week, 21 pips. And conclusion, so this is very simple. You just have to follow the 1 minute imbalances. It's powerful because it gives you the confidence to enter up to 3 times on areas that no one would enter. because no one has the confidence to enter on a first fair value gap when you have three like this, for example. Even ICT students, I think, would be afraid to enter from there after missing two entries. So it is powerful if the move is clean and straight. It is recommended to stop trying to re-enter a trade if you have already missed three entry opportunities. You can pyramid positions and gain profitability if you know where the price is going for, if you know the target. And you can also use this method to split your first position if you are not sure that you have the right trade, or if the stop loss is too wide. You cut your position in half. So instead of one lot, let's say you take half a lot, and then you add the second half of the lot on the next entry, on the next 1 minute imbalance entry. I sometimes do this when I'm not sure, or when the stop loss is too wide. I prefer to split the risk and re-enter after with a tighter stop loss, and a better risk to reward ratio. So this is it for this video, and thanks for watching. Like always, feedbacks and sharing the video, all this is welcome. And thank you for your support. I'm trying to do another video about trading soon, and hopefully I have the time to do another self-development video by the end of this year. And do not underestimate the power of mindset on your trading. This is very important. I think that's why I do those videos, because they go hand in hand with trading, self-development and trading. They go hand in hand. So thank you, and see you soon.